property crash of 2023 has already happened, and here's what you need to know about it. But before we get started, don't forget to hit that like button and subscribe. For some years now, the property market has been like a roller coaster, with prices climbing higher and higher, but like all other roller coasters, what goes up must come down. And that's exactly what we're experiencing this year, a property market crash that has caused many off guard. So what exactly led to this crash? Well, it's like the perfect storm of factors coming together. First up, we've got the infamous interest rate hike. After years of historically low interest rates, the tide turned, and borrowing suddenly became more expensive. This means fewer folks could afford mortgages, leading to a drop in demand and ultimately a downward pressure on the property prices. But that's not everything, there's more. Let's not forget the impact of the global pandemic. While the property market initially seemed unfazed, the pandemic's lingering effects had finally caught up with us. Remote work and changing priorities meant that people started reassessing their living situations. The once sought after city centre properties are suddenly not as appealing, causing a shift in demand to suburban and rural areas. Also, the supply side of things has its own role to play. Builders and developers anticipating the high demand ramped up construction, resulting in an oversupply of properties in certain areas. And as any economic 101 student can tell you, when supply outweighs demand, prices tumble. Now, let's talk about the investment frenzy that's been going on for years. The idea of making a quick buck in real estate was alluring, but with the market crashing, many investors found themselves in a tight spot. Property values plummeted, leaving some with the properties that were worth less than what they paid for. So, here's the million-dollar question. What's next? Well, as with any market crash, there's a silver lining. First-time buyers might finally catch a break as prices become more affordable. Sellers, on the other hand, might have to readjust their expectations and be prepared for a longer waiting period to offload their properties. In essence, the property market situation in 2023 is a real eye-opener. The crash has left us with valuable lessons about the cyclical nature of markets, easy for me to say, and the importance of not putting all of our eggs in one real estate basket. Some of you might be wondering, how has this crash affected homeowners and investors? Well, I've got some real life stories that will give you a clear picture of what's going on. So not so long ago, I was standing with my friend George in his living room, sipping on a cup of coffee. He's a homeowner who's been riding the property wave for quite a while. He tells me how his house is his pride and joy and his biggest investment, but as the market started to crash, so did the value of his beloved home. He found himself in a tricky situation. The equity he built up was suddenly shrinking, and he couldn't sell without taking a significant loss. It's like watching your hard-earned money vanish into thin air. And it's not just George. John, an enthusiastic real estate investor that I know quite well, he had a knack for spotting the next big thing in the property market. He had a portfolio of houses and apartments that he believed would set him up for life. But then the crash hit and his investment lost their shine. Their rental income that used to cover his mortgages and expenses was no longer enough, and he had to start dipping into his savings just to keep it afloat. It's a stark reminder that even the savviest investors can get caught in the storm. But let's not forget about Jane, a first-time homeowner who thought she'd hit the jackpot when she snagged her dream home at a relatively low price during the crash. She thought she'd outsmarted the market, but as the dust settled, she realised that the value of her property wasn't bouncing back as quickly as she hoped. This meant that if she wanted to sell in the near future, she might not make the profit she envisioned. Now, it's not all doom and gloom. There are some silver linings here. Homeowners like George might find solace in the fact that they have a roof over their heads, regardless of market fluctuations. Investors like John might see this as a learning experience, a chance to diversify their portfolio and become more cautious in the future. And Jane, well, she's still living in her dream home, and who knows, the market might pick up again. So basically, the property crash of 2023 has had its impact on homeowners and investors alike. It's a reminder that the real estate market can be a wild ride, and sometimes it's best to buckle up and be prepared for the unexpected twists and turns. Before we move on to positives, take 2 seconds and quickly hit that subscribe button, please. Now, you might be scratching your head and wondering how on earth a market crash can be a good thing for property investors like you and I. Well, it actually can. Imagine this. Sitting in a cafe with my friend Alex, who's been investing in real estate for years. Alex tells me how the market crash was like a wake-up call for many investors, including himself. You see, during the boom years, it was all too easy to get swept up in the frenzy of buying properties left and right, expecting values to keep skyrocketing. But the crash forced investors to take a step back and reevaluate their strategies. It's like hitting the reset button on their investment approach. One of the positive outcomes is that the crash separated the wheat from the chaff. What I mean by this is the investors who were merely speculating or banking on short-term gains found themselves in a tough spot. But those who had more long-term vision, who focused on properties with strong fundamentals and potential for growth, actually found themselves in a better position. They could now scoop up properties at lower prices, setting themselves up for higher returns down the road. I personally learned the hard way from this most recent economic turmoil. Several of my properties just don't work for the short-term rental strategy anymore. However, on the other hand, I found a greater profit opportunity in a different type of property through the last tough winter. Every cloud and all that, as they say. Another silver lining comes in the form of affordability. The high property prices before the crash had pushed many potential first-time buyers out of the market. But as soon as the prices dipped, suddenly the dream of home ownership became attainable. This increased demand for entry-level properties, potentially leading to better rental yields for investors who own such properties. Now, let's talk about innovation. The crash forced investors to get creative. They started exploring different investment strategies, from renting out short-term, which is my favorite as you all know, to diversifying into commercial properties. It's like a crash course in adaptability, and those who embrace the challenge might just come out stronger and more resilient. Again, I ventured into commercial self-storage and a few other different business ventures, whilst adapting my short-term rental model to a higher yielding portfolio and getting rid of the high-risk, low-margin properties. So not all crashes are bad. In fact, they can be the best learning curves for us to set us up for bigger success down the road had we not experienced the tough times. But here's the kicker. Market crashes are cyclical. It's not a matter of if, but when the market will recover. Investors who weather the storm and make strategic moves during the downturn could find themselves sitting pretty when the market bounces back. So the property crash of 2023 might have shaken things up, but it's also brought about some unexpected positive changes in the world of property investing. It's a reminder that even in the face of challenges, there are opportunities waiting to be seized. I'm sure there's a big question on everyone's minds right now, which is, will the market bounce back? Well, history has a tendency to repeat itself, and the property market is no exception. While we can't predict the exact timeline, that's say that the market will eventually recover. Prices that have been knocked down a few pegs might start to climb again, and especially if demand picks up as the economy stabilizes. Now, let's talk about interest rates. The interest rate hike that played a role in the crash might not stay sky high forever. Central banks often adjust rates to stimulate economic growth, and if that happens, borrowing could become more affordable again. This could lead to an uptick in demand, especially from first-time buyers who were waiting on the sidelines for the right opportunity. But hang on, there might be a silver lining for investors too. During the market crash, distressed properties and real estate deals become more common. Investors who've been patiently waiting for an opportunity might find themselves in the perfect position to snatch up properties at lower prices. These properties could turn into lucrative investments as the market rebounds. Now, keep an eye on government policies. Sometimes after a market crash, governments step in with measures to stabilise the housing market. This could include incentives for first-time buyers, tax breaks for property investors, or even regulations to curb speculative buying. These policies can have a significant impact on the direction the market takes. And speaking of trends, keep an eye out for shifting preferences. The pandemic has reshaped how we live and work, and could continue to influence where people want to live. Suburban and rural areas might remain popular as remote work becomes normalised. So to sum up, what's likely to come after the property crash of 2023? Well, a gradual recovery, potential opportunities for both buyers and investors, shifting interest rates, and the influence of government policies. Remember, the property market is a dynamic beast, and while we can't predict every twist and turn, being informed and adaptable is key. While a market crash can be daunting, it's not the end of the world. Remember, the property market is like a roller coaster. It has its ups and its downs. The crash might be the downswing, but history tells us that the market will eventually find its way back up. So whether you're a homeowner, an investor, or just curious about real estate, keep your eyes open for opportunities, stay informed, and be ready to adapt. Thanks for joining me on this exploration, and as always, happy investing. See you on my next video. Take care.